and welcome to the India Development Debate. I'm Tamanna Inamdar and we have a lot lined up for you today. It has been quite a newsy day. It promises to be one tomorrow as well. So let's quickly tell you all the topics and issues that we're touching upon and analyzing on today's show. First up, the big monetary policy announcement from the Reserve Bank of India is expected tomorrow. There is a split in opinion whether there will be a further rate cut or not, given that inflation has inched up in June. But the real question is, what more can the RBI do, and how much can the RBI do to kickstart an economy which seems to be in deep trouble because of the coronavirus pandemic? That's going to be our big story, our story number one on the show. And yes, it is a historical day. It is a seminal moment for India when the foundation of the Ram temple in Ayodhya has been laid. We will talk about the implications and the significance of this day ahead on the show as well. And of course, in India Revival Mission, our special programming, we will be talking about how India is planning to get Atmanirbhar on the smartphone. So all of that and more for you, but let's get to the big story. Now, the Reserve Bank of India's Monetary Policy Committee has been meeting. There will be an announcement tomorrow on the outcome of that meeting, and expectations are high. Now, as far as rate cuts go, the Reserve Bank of India has delivered and much more. 115 basis points on the reverse repo since the end of March. So the rate cuts have been there. A lot of other moves as well, like open market operations, etc., to ensure liquidity in the system. Before we move ahead, let's take a look at all the guns that the RBI has fired so far in the wake of coronavirus.
Need of the hour is to do whatever is necessary to shield the domestic economy from the pandemic.
Bankers and markets took heart from these comments made by RBI Governor and his whatever it takes approach in March, when India's COVID-19 nightmare had just started to unfold. Cut to 5 months and 115 basis points cut later, a long list of challenges and demands is staring at India's central bank as it unveils its monetary policy on the 6th of August. MPC is deliberating at a time when it is faced with key burning questions on extension of loan moratorium scheme, one-time restructuring of loans, rising inflation, and a possible massive surge in bad loans. RBI's Financial Stability Report expects gross NPAs to jump from 8.5% in March 2020 to 14.7% in March 2021.
Please do not extend the moratorium, because we see that even people who have ability to pay, whether it's individuals or corporates, are taking advantage under this moratorium and deferring payment.
Top bankers are vehemently opposing any extension of loan moratorium scheme, the deadline for which is August 31st. Deepak Parekh points out that a blanket moratorium means even the borrowers who can afford to pay will take undue advantage of the scheme, resulting in choking the fund inflow for banks, which will hurt NBFCs the most. Meanwhile, Kotak and other ace bankers suggest the pill of one-time loan restructuring so that banks can be better prepared for tomorrow.
There is a growing view across the membership of a need for a one-time restructuring. And I just wanted to present this to you as a broader request across the membership of CII as well.
All eyes are on the stance RBI will take on the contentious issues of moratorium and loan recast in its commentary after the policy announcement. Front-loading the measures in March to deal with COVID-19, Governor Das introduced several steps like slashing CRR by 1%, undertaking LTROs, ease of working capital financing, etc. These measures were pegged to inject liquidity worth 3.2% of GDP into the banking system. 2 off-cycle steep rate cuts of 75 and 40 basis points by the central bank in March and May 2020 brought India's repo rate at its historic low of 4%. But is it enough to move the needle? Governor Das promised he will do all it takes to shield the Indian economy. It remains to be seen how far will he go to keep his word. With Dimple Sharma, Chandra Ashrikant, ET Now.
Okay, so the big question is, what will be the big announcement tomorrow? Will there be a further cut in either reverse repo or repo rates? Will there be, importantly, any kind of policy statement or clarity on the big M, the moratorium issue about extending or not extending post 1st of September? Will there be any kind of insight on a one-time restructuring of loans, especially for companies that have been hit by the coronavirus? A lot of expectations on the table, and to speak to me on this now is Lakshmi Iyer, CIO, Fixed Income and Head Products, Kotak Mutual Fund. I'm also speaking with Siddhartha, Sanyal, Chief Economist and Head Research at Bandhan Bank. Welcome to both of you, and thank you so much for speaking with us today. Lakshmi, let me begin just with your take. Do you think that the RBI can truly ignore the 6.1% CPI figure that came in for the month of June and keep focusing on growth?
Hi Tamanna, good to be on your show back again. So Tamanna, if you would have seen this movie Rangila, old movie, Amir Khan movie, there is a song which goes thus, "Kya kare, kya na kare, ye kaisi mushkil hai." And I think over the 2 days that the MPC members are debating, I'm pretty sure they would be debating cut kare ya na kare, because there is this clear tug of war between a past inflation which is seemingly high, way above the RBI's comfort level, and a forward-looking number which may not be very high, because there have been supply side constraints, transportation, logistic issues, some gold prices, all that is fed into the inflation. And on the other side, you have an equally sapping credit growth, negative growth rate as far as NBFCs are concerned, SFCs are concerned as an aggregate. So I think there are two conflicting views which they are tackling. It's going to be a tightrope walk and literally caught between devil and beast. So I think these are going to be the raging issues. So there is no one answer to this. One thing is very clear, seemingly, given the past, how we have seen the Reserve Bank of India conduct itself, there may not be a mood yet to depart from the accommodative stance, even if they were to maintain a status quo on either rate.
Yeah. All right, let's just quickly tell you, I love that. And Rangila is one of my most favorite movies, and I totally get the drift that you're going for, Lakshmi. Love that analogy completely. So here is what the ET Now poll says as far as expectations are concerned. For a cut by 25 bips on the repo rate, 46% say that they expect that, but 54 say status quo. So I would say a very close split. Not too much on any one side. As far as an expectation on reverse repo is concerned, 54% of those we polled expect a cut by 10 to 25 bips coming in tomorrow. So that's Sanyal. Is that the kind of formulation you would like to see?
Yeah, the macroeconomic backdrop at this juncture is really very complicated for the MPC. If you see the operative rate, which is the reverse repo rate, they have lowered the reverse repo rate by more than 150 basis points in about 4.5 months' time. At this juncture, the negativity around growth prospect is really stark. We are talking about an unprecedented contraction in GDP in FY21. Having said that, the complication is coming from the headline print of 6.1% for the June inflation print. But having said that, what is very important to highlight and what is very important to see is that even if the headline print is slightly higher than the RBI's upper tolerance band, where exactly this particular inflation is coming from? It's coming from either because of supply disruptions and not because of any demand overeating, or even if the headline core inflation or the optics of the core inflation is slightly high, that is coming from something like precious metals and not really because of there is a lot of activity in the economy. So my sense is that even if the headline print is slightly higher than the RBI's comfort in the latest print, the pressure for the RBI to still deliver more rate cuts is quite strong. So our sense is that the RBI is definitely not done. RBI is actually far from being done away with all their rate cuts. So our sense is that over the course of the next few months, they will be cutting the interest rates substantially, even from this juncture. Now, this particular meeting is a relatively close call, but on balance, our sense is that still be going for a small calibrated cut rather than pausing at this juncture.
Sometimes it seems we have this exaggerated kind of expectations from RBI that they will come in, they will cut rates and it will soothe everything. No doubt the RBI has acted very proactively. We've listed out everything they've done since the end of March and since, you know, the economic situation started getting shaky. How much more really can they do?
See, the RBI is not like a fairy godmother or a godfather with a magical wand saying that tic-tac-toe and low rates to go. It's not going to happen that way. Rate cuts are one of the ingredients for transmission. It is not the only ingredient for transmission. There is also another element called intent and willingness to lend. And I think if you look at and if you dissect this current phase where there has been a tremendous deposit growth, where there is, you know, investors are actually making a beeline to own bank products, FDs, savings account, etc. On the other side, the credit growth is not as encouraging as it should be. And as I said, if you look at, there is one banking sector, and if you look at the non-banking segment, which is the NBFC stroke HFC, which is predominantly in the deleveraging mode, you are actually seeing a negative growth rate out there. So I think it's a combination. Unfortunately, because of moratoriums which have stepped in, there is also that feeling that there is a tendency to move towards risk aversion. And it's not only being witnessed in the capital markets, like the way mutual funds have been investing, it's also clearly and aptly visible in the bank lending. So therefore, the rates, as I mentioned earlier, need to be there as with an accommodative bias for the foreseeable future. And this is a trend globally. I think India is no exception, because it is a global medical emergency that we are combating right now.
All right, very quick word, because I'm short on time, but Lakshmi, to you first. Do you think that the big M will be addressed? Some clarity on moratorium or one-time restructuring, do you expect that to happen? Do you hope there will be some word coming in from the governor?
Something should certainly come, maybe in tranches, maybe not en masse moratorium, but for some sectors, I think they would have done enough and more data crunching. But maybe some sectors need it more than the others. So probably something for that, along with a one-time restructuring for banks with some provisioning, X amount of provisioning, etc. Could be something we could get some peek sneak. May not be the entire movie, but certainly some trailers into that tomorrow is expected.
Mr. Sanyal, are you expecting any word on that or any clarity on these two very key issues tomorrow?
Yeah, that's very much expected, because the moratorium what the RBI has announced is getting over towards the end of this particular month. So it's possibly an appropriate forum to indicate the future course of action on that particular aspect. Yeah. And our sense is that, yes, some bit of, I mean, if they consider some kind of one-time restructuring that can actually give banks a lot of cushion in terms of judging their portfolio rather than giving en masse moratorium. So that might be an approach at this juncture on the part of the RBI.
All right, we'll have to wait and watch. We go into every policy announcement with a huge list of expectations. Let's see which ones we can tick off this time tomorrow. Thank you so much, Lakshmi Iyer and Mr. Sanyal, for joining us today on The First Big Story.